Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend, all. Ira Epstein of Lynn & Associates with your weekend update for your agriculture markets for this Friday, the 17th of November, 2017, just after 2:15 p.m. Central Standard Time. The ag markets are closed, so we can do this early. I want to remind you of a couple of things. Number one, on our weekend editions, we look at the monthly chart first, then the weekly charts. Second thing, we're going to have a whole new website that we're putting up later, about 3:30 today. We're going to start. I don't know how easy it'll go. We're prepared to work through tomorrow to get it up. It'll be a whole new look. Eventually, you're going to be able to get into our different libraries that we have. You know, it's part of brand new marketing going towards the end of the year and into 2018. And our site is more of a catalog than anything else. All of the information we really do is in our charting platforms. That's where I like to put the research other than my videos, but even my videos will play through here. But let's go and talk about the markets. It's exciting right here. What took place is the bean market finally took off. Now you'll say, well, an 18-cent rally, it's the beginning of what? And I say it's the beginning of something important. The seasonals kick in around mid-November, yesterday to be specific. Often they last until the end of December, where prices are higher at the end of December than they are at mid-November. Can it work every year? I don't know. I know according to Moore Research Center, and that's the Moore Research Center, right, that you see behind me here, they've done their studies, and out of 15 years, it's worked 15 times. Believe me, you'll put it on, it could be the 16th year and you get your loss. Nothing is a guarantee. You use this with other things. That is the key. It gives you an idea of what seasonals are. Could be based on harvest, could be based on lack of selling pressure, could be based on a whole number of things, but it's one of them. What I like you to do is take a trial, learn about it, don't apply it till you learn and you understand what this is. This is not walking on water. Just because something's worked a long time, I'm telling you, I'm like Swiss cheese if you can understand this. I've gone into these and all of a sudden I get the one losing year. It's like everything in life. Whatever can go wrong does go wrong. But you pay attention, and nobody said you hang around to the end anyways. You got to learn how to take these things into your own trading technique. Got it? So when I'm looking at the beans, what I'm seeing on a monthly chart to start with is sideways action. That's all. Now the question is, where do we go? I'll call the market having been in a down thrust. It dropped approximately $3.08 from the peak here in 2016 to where we're at right now. The market has tried to be in a bit of a corrective mode, and it's been holding over the 18-week moving average of closes, and this is a weekly area chart of only closing prices. And it's done a job of staying over that, and I think you'd agree. It did that starting around September. This week, the market tried to break out to the downside, ran into further support of an area it had been, and it's coming back into resistance points right through here. Should the market be able to clear this area, it's got some fairly clean sailing ahead of it at that point, might capture traders. Now, the part of the interest is the low for this week was 958.5, which took out a previous week's low right here, 969 3/4. So the trend of the market is down because you have lower highs and lower lows. The market, as you just saw, found its legs near the lows of the 18-week moving average of closes, managed to come up and even get over the 100-week. If it moves up from here, one of the resistance points is clearly the last high around the 994 area, and then the upper Bollinger Band right up here at 1014 and a fraction, which ties in with these highs. So the question now is, does the market have the momentum to move up? Will the seasonality of the market work? And on a weekly chart, the momentum is clearly to the upside. So on the bean market, you should have your blinkers open. The market is trying to get something done. Whether it can or not, well, what if it fails? I think you see it fails if you take out this week's lows. That could throw out the whole seasonal. When I come to the meal market's got momentum up. The market has stayed over the 18-week average of closes. Should this market get over this 321 area, as you can see, this week's low was 309.60. It, like beans, will have a lower low, then take out that high. It puts into play the potential, if it does that, of what? 330.70. Now let me give you the other side of this argument. Let's not take out 321.80. Market gets under this week's lows. You have lower highs. You have lower lows, close under 310.50, and I can make an argument for the 290.40 area. That is why you've been stuck in this sideways action trying to figure out what to do. In the soybean oil market, the market has stayed for the past, 5 weeks or so over the 18-week moving average of closes. The market's also been over the 100-week. The bias of the market has been up, but momentum has suddenly stalled. It was pointing up a lot more, as you can see, when it was doing this. It got itself up as this was occurring to the upper Bollinger Band, ran out of its momentum and pulled right back to the 18-week average of closes, where it is trying to figure out what to do next. I'm going to call this chart upside bias, flat momentum, and a market that's trying to put in an uptrend hasn't succeeded in doing it yet. In the corn market, the weekly chart looks very different than the daily chart. On the weekly chart, momentum is flat. The market has been in a downtrend. Lower highs, lower lows. Resistance is formidable. It ended this week at 352 3/4, but it's going to drop Sunday night. It's been dropping about a penny and a half, 2 pennies a week, so I wouldn't be surprised to see that continue in the market. And that means that the resistance of the 18-week average of closes will be just under the last peak high. In the wheat market, should the market take out right through here, this 434 area, what could suddenly happen is you got higher lows and then higher highs. Literally right into key resistance of 438 and 439, which are the 100-day and the 18-day average of closes. The trend of the market at this moment is down. You have lower highs, you got a lower low. You actually had your lows from back here. But let me confuse you, and I want to do that. I can argue you had the lower highs. But with this low here, and then the market comes down and it hasn't taken out 416, I can argue that you're doing this type of pattern, narrowing in. And that's what I think is going on. This market's looking for its direction. I think it throws in the towel to the bear side if you take out 416 1/4. If you can take out this high, then the question is corn, beans, what's going on around it to pick this market up? Can it pick itself up and go anywhere? In the cocoa market, you've had a pattern of higher lows, higher highs in an uptrend, riding the upper Bollinger Band, and momentum is still bullish, not bearish on the chart. The sugar market acts like a chart that based out right through here and is just grinding itself to higher prices. The market's got upside bias. The market's just laying on top of that upper Bollinger Band, and momentum is continuing to point to the upside. In the coffee market, it's a flip-flop of this. It looks bearish. And the reason is lower highs, lower lows. You're under the 18-week average and the 100, and momentum is just laying down. If it gets any momentum here, it might be going to that lower Bollinger Band near the 119.70 level. A market that is trying to pick itself up all of a sudden is cotton on the weekly chart. It's got higher lows. The last high was 70.22. You haven't quite broken through that, but that 70.22 was still higher than that high. So I'm arguing that you already have the higher highs. You've now got the higher lows, and you closed over the 18-week average of closes. In order to break this momentum that's trying to move to the upside, you've got to take out 67.95. Barring that, I think the bulls are grabbing control of this market. We then get to the meat markets, which are in and have been, especially on the daily charts, one heck of a correction. But it doesn't look that bad when you get to the weekly charts. On the weekly charts, you got up and over the upper Bollinger Band. You got to 127.87, and yes, you're about $10 lower. Now, there is a cattle on feed report today. I haven't seen it as I'm doing this because I've been in the studio, but I'll be curious to see it. But all the market's done is come down to the 100-day average. Let's assume that report's bearish. Next support's the 18-week moving average of closes. Let's assume the report's bullish. You might look back and say, well, the market got over the upper Bollinger Band and found its support here. Any way I look at the chart, the trend is up. You have higher highs, higher lows. You're over the 18-week average. What it's fought is a correction as momentum has moved back to the downside. That's where I see that chart. In the hog market, because you have stayed all this time now under this 18-week average of closes, my bias has been not up. It's been down. The market's now fought a battle, and it is fighting it against the crossover where the 18-week average is getting under the 100. Momentum is still pointing down. You have one of these patterns of higher lows, higher highs, but you're staying under the market, the 18-week average, and momentum is just laying flat in the water here. Very difficult market. So you put it all together and you say to yourself, okay, there's some opportunities. What do I do with them? Well, you might want to look, as I said, at seasonals. Again, 2-week trial to do more research, and it does spreads, it does futures, it does the cash markets, and you can look forward at different futures months to get a feel as to what has happened seasonally. I'm going to warn you again, and I will do it over and over. Seasonals are another trading tool. They are not the know-it-all. They are just another tool, but I like to know what has happened in the past, and here's what they do pretty neat. You can look at bull and bear years. So you have the ability to look back and say, gee, in bull years we did this, in bear years we did that. They also write about this. How do you get their 2-week trial? You can give us a call. You can go to our website. Just sign up for it. You'll see the carousel of free offers. Click here, or underneath us on many websites says, click here for Ira's free offers. You have a great weekend, and I'll see you all come Monday.